Every trader starts with a moment where the idea of trading first appears. Maybe it was a video, maybe it was a friend, maybe it was a screenshot of profits, maybe it was someone talking about making money from a laptop anywhere in the world. And something about that idea grabs your attention because the possibility feels powerful. The possibility of financial freedom, the possibility of escaping a traditional job, the possibility that you could build something for yourself. So you start researching. You watch videos. You open charts. You learn about candles, support, resistance, indicators, strategies. And very quickly, the world of trading becomes fascinating. It feels like a puzzle waiting to be solved, a skill that once mastered could change everything. And this is where almost every trader begins. The curiosity stage. At this stage, trading feels exciting. Everything is new. Everything feels like progress. You open charts and watch how price moves. You start recognizing patterns. You start seeing opportunities. And it feels like you're discovering a hidden world most people never notice. But curiosity quickly turns into something else. Confidence. Because after enough videos, after enough tutorials, after enough time watching charts, you begin to believe something. You believe you are ready to trade. So you open your first account. You deposit your first amount of money. Maybe it is $100, maybe $500, maybe $1,000. And then you take your first trade. This moment is unforgettable for almost every trader. Your heart beats faster. Your eyes are glued to the screen. Every small movement in price suddenly feels important. If the trade moves up, you feel excitement. If the trade moves down, you feel anxiety. Because now the market is no longer just numbers on a chart. Now it is real money, your money. And this stage is often called the excitement stage. The stage where trading feels thrilling, where every trade feels like a big moment, where every win feels incredible, and every loss feels painful. Sometimes beginners get lucky during this stage. Their first few trades work. The market moves exactly how they expected. Their account grows. And that early success creates confidence. But sometimes that confidence grows too quickly because the trader begins to believe something dangerous. They begin to believe that trading is easy. They believe they understand the market. They believe they have discovered the secret. But the market has a way of humbling people very quickly. Soon a trade goes wrong, then another, then another. Suddenly the profits disappear, and the trader enters the next stage, the confusion stage. This stage can be frustrating because the trader believes they did everything right. They followed the strategy. They analyzed the chart. They entered the trade, but the market still moved against them, and the trader begins asking questions. Why is this happening? Why did the market move the opposite way? Why did my strategy stop working? This confusion leads many traders to search for answers. They start exploring new strategies, new indicators, new trading systems. And this begins the next stage of the trading journey, the strategy hopping stage. During this stage, traders believe the problem is the strategy. They think the reason they're losing money is because their system is not good enough. So they start searching for a better one. They try moving averages. They try RSI. They try MACD. They try Fibonacci. They try support and resistance. They try price action. They try breakout strategies. They try scalping. They try day trading. They try swing trading. And every time they discover a new system, they feel hope. This one will work. This one will be the strategy that finally makes everything click. For a short period of time, it feels promising. The trader studies the rules. They apply the indicators. They take a few trades. Sometimes they even get a few wins. But eventually losses appear again, and the cycle repeats. They abandon the strategy. They search for another, then another, then another. Months can pass during this stage, sometimes even years, because the trader believes the answer is always one strategy away. But eventually something begins to become clear. No strategy wins every trade. No system works perfectly, and the trader slowly begins to realize something important. The strategy was never the main problem. Another stage begins to appear. The frustration stage. This stage is difficult because the trader has spent time, energy, effort, and money, but the results are not what they expected. Accounts have been blown. Strategies have been abandoned. Confidence begins to fade. Many traders quit during this stage. They conclude that trading is impossible. They believe the market cannot be beaten. They walk away. But some traders decide to continue. And those traders begin entering one of the most important stages in the journey, the realization stage. During this stage, something begins to change. The trader begins to look inward instead of outward. Instead of asking which strategy is better, they begin asking different questions. Did I follow my rules? Did I manage risk properly? Did emotions influence my decisions? Did impatience cause me to enter too early? Did fear cause me to exit too soon? This stage introduces a powerful concept, trading psychology, because slowly the trader begins to notice something. The strategy was not the biggest problem. Their behavior was fear, greed, impatience, revenge trading, overconfidence. These emotional reactions were influencing their decisions far more than they realized. And once this realization appears, the trading journey begins to change. Because the trader starts focusing on discipline rather than prediction. They stop trying to guess the market perfectly. They start focusing on executing their rules consistently. This leads to the next stage, the discipline building stage. At this stage, the trader begins developing habits. They journal their trades. They review their decisions. They analyze their mistakes. They focus on improving their process. Trading slowly becomes less emotional, more structured, more controlled. The trader begins understanding something powerful. You cannot control the market, but you can control your behavior. You can control your risk. You can control your discipline. And over time, those elements begin creating stability. Losses become smaller. Mistakes become less frequent. Decisions become clearer. The trader begins approaching the market with patience instead of urgency because they realize something important. The market will always provide opportunities. There's no need to force trades. And once this mindset develops, the trader enters another stage, the patience stage. This stage is where many traders begin to feel calmer. They are no longer chasing every movement in the market. They're no longer jumping into trades impulsively. Instead, they wait. They observe. They study the chart. They allow the setup to come to them. Because experienced traders understand something beginners often ignore. The best traders are not constantly trading. They're constantly waiting. Waiting for the right conditions. Waiting for confirmation. Waiting for probability to shift in their favor. And when those conditions appear, they execute their plan. No hesitation. No emotion. Just disciplined execution. This stage does not mean every trade wins. Losses still happen, but something is different. Losses are controlled. They no longer destroy the account. They become part of the process. Because the trader understands that trading is a probability game, not a certainty game. And once a trader fully accepts this concept, they move closer to the final stage. But before that happens, there is one more important transformation. The mindset shift. This is the stage where traders stop focusing on profits. Instead, they focus on process. Instead of asking how much money they can make from a trade, they ask whether the trade fits their system. Because consistent execution eventually leads to consistent results. This mindset removes much of the emotional pressure from trading. The trader no longer feels the need to win every trade. They focus on following their plan, managing risk, and repeating their process. Over time, something remarkable begins to happen. The account begins to stabilize. Losses remain small. Winning trades grow larger. Confidence becomes stronger. And slowly the trader begins approaching the final stage of the journey. But that stage requires something most traders never develop: patience, consistency, and the willingness to continue improving even after progress appears. Because becoming profitable in trading is not a single moment. It is the result of thousands of disciplined decisions made over time. And the traders who reach that stage are the ones who survived every stage before it. Curiosity, excitement, confusion, strategy hopping, frustration, realization, discipline building, patience. Each stage teaches a lesson. Each stage shapes the trader. And the traders who refuse to quit during those stages are the ones who eventually reach profitability. Because trading success is not just about strategy. It is about growth. Growth in discipline, growth in patience, growth in mindset. And the traders who embrace that journey eventually become the ones who succeed. After the patience stage begins to develop, something interesting starts happening inside the mind of a trader. The urgency slowly disappears. The constant feeling that every candle must be traded begins to fade. The market no longer feels like a race. Instead, it begins to feel like a process. This leads to another stage many traders experience: the acceptance stage. This is the stage where traders finally accept something that once felt uncomfortable. Losses are part of trading. Not every trade will win. Not every prediction will be correct. And that is completely normal. For a long time, beginners resist this idea. They want certainty. They want a strategy that wins almost every time. They want to avoid losses completely. But experienced traders eventually learn that losses are simply the cost of doing business. Just like any other profession has expenses, trading has losses. And once this idea is fully accepted, something powerful happens. The emotional pressure decreases. A losing trade no longer feels like a personal failure. It becomes just another outcome in a long series of trades. Because the trader now understands that success is measured over many trades, not one. This understanding leads to a calmer mindset. Instead of reacting emotionally to every loss, the trader remains focused on the bigger picture. They review the trade. They analyze the setup. They ask one simple question: did I follow my plan? If the answer is yes, then the trade was still successful in terms of discipline, even if it lost money. Because disciplined execution is what leads to long-term consistency. And consistency is what eventually leads to profitability. This mindset leads to another important stage in the journey: the consistency stage. At this point, the trader has stopped searching for shortcuts. They're no longer jumping from strategy to strategy. They have chosen a method. They understand how it works. And they're focused on executing it repeatedly, day after day, trade after trade. The trader begins to notice something important. Their behavior has changed. They're no longer chasing trades. They're no longer entering impulsively. They're no longer risking large portions of their account. Instead, they follow a process. They wait for their setup. They enter with discipline. They manage risk carefully. They exit according to their plan. And they repeat that process again and again. This repetition builds confidence, not the loud confidence that comes from a lucky winning streak, but quiet confidence, the kind that comes from knowing you are following a proven system, the kind that comes from controlling your emotions, the kind that comes from discipline. And when this stage is reached, the trader begins experiencing something new: stability. In the beginning, trading often feels like a roller coaster. Large wins followed by large losses. Emotional highs followed by emotional lows. But during the consistency stage, the roller coaster begins to flatten. Losses are smaller. Wins are more controlled. The account balance stops swinging wildly. Instead, it begins moving gradually. Slow progress, but stable progress. This stage can feel less exciting than the early stages, but is far more important, because stability is the foundation of long-term success. Without stability, profitability cannot last. Another realization begins to form during this stage. The trader begins to understand that trading is not about predicting the market perfectly. It is about managing risk effectively. Every trade carries uncertainty. Every setup has a probability, and successful traders focus on stacking those probabilities in their favor. They look for setups where the potential reward is greater than the potential risk. They allow winners to grow. They cut losses quickly. And over time, this balance between risk and reward begins producing positive results. This leads to another stage that many traders experience: the confidence stage. This stage does not appear suddenly. It builds slowly over time, trade by trade, week by week, month by month. The trader begins noticing that their decisions are improving. They are entering trades with greater clarity. They are exiting trades with discipline. They are following their plan consistently. And this creates confidence, not because every trade wins, but because the trader trusts their process. They understand that the system works over time. And once this trust is built, the emotional pressure of trading becomes much smaller. The trader no longer doubts every decision. They no longer panic when the market moves slightly against them. They remain calm, focused, disciplined, and this calmness allows them to see the market more clearly because emotional noise is no longer interfering with their thinking. This stage leads to one of the most powerful transformations in the entire trading journey: the professional mindset stage. At this point, trading stops feeling like gambling. It stops feeling like guessing. Instead, it begins to feel like a profession, a structured activity with rules and discipline. The trader approaches the market with preparation. They analyze the charts before entering trades. They define their risk. They understand their strategy. And they execute their plan with patience. This professional mindset changes everything because the trader is no longer reacting emotionally. They are operating with intention. They are following a system, and systems produce repeatable outcomes. Over time, the results of this discipline begin to appear. The account begins growing more consistently. The losing months become smaller. The winning months become more frequent. And eventually something remarkable happens. The trader reaches the stage they once dreamed about: the profitability stage. This stage does not appear suddenly. It does not arrive in one dramatic moment. Instead, it arrives quietly, gradually. The trader notices that over time their account is growing. Not every day, not every week, but overall, the trend is positive. This is when the trader realizes something important. Profitability is not a single trade. It is the result of a process repeated over time. Thousands of disciplined decisions, thousands of controlled trades, thousands of moments where patience replaced impulse. This is what separates profitable traders from the majority who lose money. Not intelligence, not luck, but discipline. The discipline to follow a system. The discipline to manage risk. The discipline to control emotions. And perhaps most importantly, the discipline to continue learning. Because even profitable traders continue improving. They continue reviewing their trades. They continue studying the market. They continue refining their mindset. The learning process never truly ends. Markets evolve. Conditions change. New patterns emerge. And traders who remain adaptable continue growing. This final stage is not the end of the journey. It is the beginning of a new one. The stage where trading becomes sustainable, where the trader is no longer chasing success. They are maintaining it. But when you look back at the entire journey, something becomes clear. Every profitable trader once stood at the very beginning. Curious, excited, confused, frustrated. Every stage served a purpose. Every mistake taught a lesson. Every setback created growth. And the traders who eventually succeed are not the ones who avoided these stages. They are the ones who moved through them. They learned from them. They improved because of them. And they refused to quit during the difficult moments. Because trading is not just a skill. It is a journey of personal development. A journey that challenges patience, discipline, emotional control. And the traders who embrace that journey eventually become something different from when they started. They become calmer, more focused, more disciplined, more resilient. And those qualities extend far beyond trading. They influence how the trader approaches challenges in life, how they handle uncertainty, how they make decisions, Because the mindset required for trading success is the same mindset required for success in many areas of life. Patience, discipline, consistency, long-term thinking. And when these qualities are developed, the results begin to appear, not only in trading, but in everything the trader pursues. So if you're currently in one of the earlier stages of your trading journey, remember something important. Every successful trader has been there. Every profitable trader has experienced confusion. Every profitable trader has made mistakes. Every profitable trader has faced frustration. But they continued learning. They continued improving. They continued moving forward. And eventually their persistence paid off. Because profitability in trading is not reserved for a special group of people. It is earned by those who commit to growth, those who develop discipline, those who refuse to give up during the difficult stages. And if you stay committed to that process, you will eventually move through the same stages that every successful trader has experienced. And one day you may look back and realize that the journey itself was what shaped your success. If you enjoyed this video and want to see more content about trading psychology, discipline, and developing the mindset required for long-term success, make sure to like this video and subscribe to the channel so you do not miss upcoming videos from Trading Mindset Journal. Your journey as a trader is still unfolding, and the most important stages may still be ahead of you. Eventually, something begins to change in the way the trader sees the market. In the earlier stages, the market felt unpredictable. Every candle felt dramatic. Every move felt personal. But after enough time studying charts, reviewing trades, and learning from mistakes, the trader begins seeing something different. Clarity. What once felt chaotic slowly begins to make sense. Price movements begin forming recognizable patterns. Trends begin becoming easier to identify. Support and resistance begin standing out more clearly. And most importantly, the trader begins understanding their own behavior. Because one of the most powerful realizations in trading is that the market was never the biggest challenge. The trader themselves was. In the early stages, traders often believe the market is the problem. They believe the market is unfair. They believe it moves randomly. They believe it tricks them. But over time, experienced traders begin seeing the market differently. The market is simply a reflection of human behavior. Millions of participants making decisions at the same time. Fear causing rapid selling. Greed causing aggressive buying. Uncertainty creating hesitation. Momentum creating trends. Once a trader understands this, something shifts. They stop trying to control the market. Instead, they focus on controlling themselves, their decisions, their discipline, their reactions. And this shift is what moves traders closer to long-term success. Because once a trader stops blaming the market and starts improving their own behavior, real growth begins. They start noticing their emotional patterns. They notice when impatience causes them to enter too early. They notice when fear causes them to close trades too quickly. They notice when frustration tempts them to revenge trade. And once these patterns become visible, the trader gains something extremely valuable: awareness. Awareness allows correction, and correction leads to improvement. This stage of awareness is where traders begin transforming from reactive participants into disciplined decision makers. Instead of reacting to every movement, they pause. They evaluate. They ask themselves simple questions. Does this trade meet my rules? Does this setup fit my strategy? Is the risk acceptable? If the answer is no, they wait. If the answer is yes, they execute. No emotion, no hesitation, just disciplined action. This stage creates a sense of calm. Trading stops feeling like chaos. Instead, it begins feeling structured, like following a process, a routine, a system. And that system becomes the foundation of consistency. Another change that happens during this stage is the way traders respond to losses. In the beginning, losses feel painful. They feel like failure. They feel like proof that something is wrong. But experienced traders begin seeing losses differently. They see them as information. Feedback. Every loss contains a lesson. Maybe the entry was too early. Maybe the stop loss was too tight. Maybe the market conditions were not ideal. But instead of reacting emotionally, the trader analyzes the situation. They review the trade. They learn from it. And they apply that knowledge moving forward. This mindset turns losses into progress. And over time, those lessons accumulate. Each lesson strengthens the trader's understanding of the market. Each lesson improves their discipline. Each lesson refines their decision-making. Eventually, the trader begins noticing something interesting. The market no longer feels overwhelming. Instead of feeling pressured to act, they feel comfortable waiting for the right conditions, waiting for confirmation, waiting for probability to shift in their favor. Because they now understand something beginners rarely accept. Not trading is sometimes the best decision. Patience becomes a strength rather than a weakness. This patience protects the trader from overtrading. Overtrading is one of the fastest ways to destroy a trading account. Entering trades out of boredom. Entering trades without confirmation. Entering trades simply because the market is moving. But disciplined traders resist that temptation. They understand that opportunities will always come. There's no need to force them. This patience creates another benefit. It improves the quality of trades. Instead of taking 10 average setups, the trader waits for one strong setup. Instead of chasing every movement, they focus on high probability opportunities. And this shift dramatically improves results. Because trading success does not come from quantity. It comes from quality. A few well-executed trades can outperform dozens of impulsive ones. This realization changes the entire experience of trading. The trader begins operating with confidence, not because they believe they will win every trade, but because they trust their process. They trust their preparation. They trust their discipline. And this trust creates stability. The emotional highs and lows begin to disappear. Trading becomes calmer, more controlled, more predictable. Instead of feeling like gambling, it feels like following a system. And this system produces gradual growth. Not explosive gains, but steady improvement. Week after week, month after month, the account begins showing consistent progress. Losses still happen, but they're controlled. Wins begin outpacing losses, and slowly the account begins growing. This is when the trader realizes something powerful. Profitability is not one big trade. It is not one lucky moment. It is the result of thousands of disciplined decisions. Each trade is just a small part of a much larger process. And when that process is executed correctly over time, profitability becomes inevitable. But even at this stage, successful traders continue improving. They continue studying the market. They continue reviewing their trades. They continue refining their mindset. Because markets never stop evolving. Conditions change. Volatility shifts. New patterns emerge. And traders who remain adaptable maintain their edge. This commitment to continuous improvement separates professionals from amateurs. Amateurs look for shortcuts. Professionals build systems. Amateurs chase excitement. Professionals focus on discipline. Amateurs quit when things become difficult. Professionals adapt and continue moving forward. This difference in mindset is what ultimately separates profitable traders from the majority. Because trading success is not about predicting the future perfectly. It is about managing uncertainty, managing risk, managing emotions, and executing a process consistently over time. When those elements come together, profitability becomes the natural outcome. But when you look back at the entire journey, something becomes clear. Every profitable trader once stood at the very beginning. Curious, excited, confused, frustrated. Every stage served a purpose. Curiosity sparked interest. Excitement encouraged exploration. Confusion forced learning. Frustration created resilience. Discipline built consistency. And patience allowed growth. Each stage shaped the trader. Each challenge strengthened their mindset. And the traders who eventually succeeded were the ones who continued moving forward through every stage. They refused to quit. They refused to accept failure as the final outcome. Instead, they used every setback as motivation to improve. And that persistence is what eventually led them to profitability. Because trading success is not reserved for the smartest people. It is reserved for the most disciplined, the most patient, the most committed to continuous growth. So if you're currently somewhere in the middle of your trading journey, remember something important. Every stage you are experiencing is part of the process. Confusion, frustration, doubt. These are not signs that you cannot succeed. They are signs that you are progressing through the same stages that every successful trader has faced. The key is to keep learning, keep refining your discipline, keep improving your mindset, and most importantly, keep showing up. Because consistency in effort eventually leads to consistency in results. One day you may look back and realize that the challenges you faced were actually the lessons that shaped your success. The stages you struggled through were the stages that built your discipline. And the persistence you developed along the way became the foundation of your profitability. Because trading is more than a skill. It is a journey of personal development, a journey that strengthens patience, a journey that builds emotional control, a journey that rewards discipline and long-term thinking. And the traders who embrace that journey eventually reach a point where the market no longer feels intimidating. It feels familiar. It feels structured. It feels manageable. And that is the moment where everything begins to change. Because the trader is no longer chasing success. They have built the mindset required to sustain it. If you enjoyed this video and want to see more content about trading psychology, discipline, and developing the mindset required for long-term success, make sure to like this video and subscribe to the channel so you do not miss upcoming videos from Trading Mindset Journal. Your journey as a trader is still unfolding, and the most important stage may still be ahead of you.